Okay, we are back continuing on with financial statement analysis. Now we're going to talk about vertical analysis. Oh, and this is Class 40B if you're Monday, Wednesday, Friday, and Class 27B if you're Tuesday, Thursday. So we already talked about horizontal analysis and trend analysis. Now we're going to talk about vertical analysis. So like it sounds, we're kind of going to go up and down the financial statement. Vertical analysis of a financial statement shows the relationship of each item to its base amount, which is the 100% figure. Every other item on the statement is then reported as a percentage of that base. For the income statement, net sales is the base. For the balance sheet, total assets is the base. So we're going to take every number, divide it by our base, and we'll get some percentage. All right, so let's look at an example. All right. This is example 15.3 from the book, A Comparative Financial Statement with a Vertical Analysis. So if you look up at the top, you'll see that they have sales is 100%. All right, then everything else is what percentage of net sales is that. So sales is 100%. Cost of goods sold, if you look down that column for 2018, cost of goods sold was 59.8%. which means their gross profit is 40.2%. All right. Then you go down what percentage of sales was each thing. So you get down to the bottom line, which says net income is 5.6% of sales. So that's like for every dollar you sell, you're going to get 5.6 cents, right? So out of it ultimately. So that's how you can compare companies to each other, right? Because you could have something that has a very big large sale, and it's hard to compare to something that has very small sales, but if you turn everything into percentage, you can see, well, how much of their sales are they turning into net income? And that's an interesting number, no matter how big they are or how small they are. And you can do the same thing for the balance sheet. The 100% is total assets. All right, so this is exhibit 15-4. A comparative balance sheet with a vertical analysis. So base amount is 100, so all of these numbers you take and you divide them by 100 to get what percentage of, you take it and then divide it by the total assets. So this 507, you divide it by 787 and it becomes 64.4%. That 18,000, you divide it by 787, it's 2.3%. So you do that for the whole balance sheet, and it's telling you, do they have a lot of current assets or do they have a lot of plant assets? What's their asset structure? And you're going to continue on and apply that same number to the liabilities and the owner's equity. And that tells you that what percentage of your assets are liabilities. Because if a bunch of your assets are going to be tied up as liabilities, that's good to know. So 54.8% of your assets could be 54.8% of your assets are liabilities. So you can apply that and say, well, that's not too bad. We have a lot more assets than liabilities. We have half again as many assets as we have liabilities. So the base amount for the liabilities and owner's equity is the same thing as total assets, because assets plus owner's equity equals liabilities. So you can divide it by either number, total assets or the total liabilities and stockholders' equity, and it just shows you about your capital structure, like what percentage is equity, 45.2, and what percent is liability, 54.8. So that way you could say, oh, well, we have a lot of debt, or oh, our owners put a lot of money in. Common size statements. So to compare one company to another, we can use a common size statement. Horizontal and vertical analysis provide much useful data about a company. As we have seen, Smart Touch Learning's percentages depict a very successful company, but the data apply only to one business. To compare Smart Touch Learning to another company, we can use a common size statement. A common size statement is a financial statement that reports only percentages, not dollar amounts. By reporting only percentages, it removes dollar value bias when comparing one company to another. Dollar value bias is the bias we see from comparing numbers in absolute dollars rather than relative percentages. So let's look at what we mean by common size. So imagine you wanted to compare, I think I used the example of Walmart to Tiffany's. Okay, Walmart is huge, right? They're both retailers. And they certainly retail very different things. However, they're both retailers. So which one might you want to invest more in? Well, if you look at this, you compare Smart Touch Learning to Learning School. We don't really know how big Learning School is. It could be way bigger, it could be way smaller. It doesn't matter if all we care about is what is their gross profit, right? What are their operating expenses? So we could compare common size statements for Smart Touch Learning from year to year. However, we will start by preparing common size statements for Smart Touch and Learning School, another fictitious company, both of which compete in the same industry. Which company earns a higher percentage of revenues as profits for its shareholders? Exhibit 15-5 gives both companies common size income statements for 2018, so we can compare them on a relative, not absolute basis. So if you look at these common size, for every $1 of net income, Smart Touch is earning net sales. For every dollar of net sales, they turn that into 5.6% return, right? So if I spend $100, I get $5.60. Whereas at Learning School, if I get in sales of $100, I'm going to take home $23.50. So you're taking home a lot more net income percentage-wise from Learning School. Now, how big is Learning School? I don't know. But we can see they're kind of doing a better job of earning a profit. There's this tool called benchmarking. Benchmarking is the practice of comparing a company with other leading companies. It often uses common size percentages in a graphical manner to highlight differences. There are two main types of benchmarks in financial statement analysis: benchmarking against a key competitor and benchmarking against the industry average. So here's common size, Smart Touch versus Learning School. So you're comparing these two. So you can imagine if you're running an airline, you might want to compare it, benchmark it to Southwest Airlines. And say, well, let's look at how we know they're really good, and we want to compare ourselves to Southwest. Let's see how we're doing compared to them. And all they've done is take those common size financial statements and turn them into pie charts, showing you if 100% is the sales, then what percentage are they doing? And a pie chart just makes it easy to see how they're doing. You can see very easily by looking at this that like Smart Touch has a lot bigger cost of goods sold than Learning School, and Learning School has a lot bigger net income than Smart Touch. So benchmarking is a way of comparing one company to another company, or you can also calculate industry averages and compare them to those. So that's another good way to do that. All right, so when we come back, we'll have 2 more videos on financial statement analysis, and then that will be it. All right, good luck.